Thanks, Denny, and welcome back to Investing with Confidence on this beautiful Saturday morning right here in Bloomington. If you're just tuning in, Al was shedding some light on how these markets function, how the institutions move the markets. When there's more buyers than sellers, price will go up. When there's more sellers than buyers, price will go down. The market is actually a very simple moving thing. You have to understand how to understand the institutions moving those markets and trade like them. They plan every trade, so they know where they're going to get in, but also where they're going to get out before they even get into the trades. And in these investing classes that I've been talking about, we teach you the different techniques and concepts how to do that yourself, because these are also available to us. We can do the same things. You just have to have that skill and learn the different techniques and concepts. If you happen to miss 2 tickets for that investing class, call 952-814-4410. That's 952-814-4410. When you call in right now, you're going to receive a free cryptocurrency foundations course. Cryptocurrency is pretty hot right now. We talked about it at the beginning of the show. Great moves in these markets. This is the internet 1995. Don't get left behind. If you feel like you got left behind in the internet craze back in 95, don't do that again. What's that saying, Al? Do fool me once, shame on you. Fool me twice, shame on me. Don't be that person. Al, you want to get into another concept about the Wall Street, what they're doing with giving advice, how they're telling us or the public to do certain things. Is that advice really for us? Are they leaving something out in that advice?
Well, understand that that is a business, a very lucrative business, and the most important thing to them is their bottom line. And one of the I guess the victims of that kind of business model is that you are not always taught what you need to have financial success. I mean, there's a significant component that's left out, and that's basically the income component. Most people go to a Wall Street advisor and they will take your money, put it into a portfolio, tell you to hold on to it for the long term. You're in this for the long term. It's multiple decades. And a lot of those advisors now are saying, well, look, if you have $250,000 or $500,000, we will then work with you. Well, what they're doing is they're assuming that you already have amassed enough income to build that wealth up. So then they'll take your wealth and they will sell you products to invest it.
You know what's crazy, Al, is people trust their advisor. You see these commercials on TV. Trust your advisor. They're your friendly person. They're nice guys or they're nice gals. Well, they are regular people, right? But they're not actually investing your capital. They're just getting capital under management, just getting dollars under management, and they give it to somebody to hopefully invest for you. Are they different people? What's the difference between institutions or the banks that are investing and the public? Is it really anything?
Well, no, it's knowledge. It's the knowledge that they have to utilize that money. But that knowledge is available to you as an individual investor. But what I was talking about with that income component being missed, think about this. When you are working, you have income coming from your job, and that income goes to pay your bills, basically goes to keep you alive. But at some point in time, you're going to need to have a nest egg, something that will take you through your retirement years. Where does the money come from to actually fund that? It comes from the income that you're earning while you're working. What if that income isn't enough? What if there's not enough there after the bills are paid, you've had some fun, maybe taken a vacation, bought a new car, whatever it is, there has to be some left over to go into the retirement bucket.
Everybody likes to spend money.
Well, sure they do. No, absolutely they do. And the point at which you probably get the feeling when you're first working, you've got this income coming in for the first time, it's fun to spend it. That's really when you should start putting that money aside for down the road, because down the road comes faster than you think. But the income component is significant. Everybody should learn how to invest for income, because not only might you need it now as an additional source of cash while you're, building up for your retirement, but also when you're in retirement, you're going to use those income skills to generate income off of your retirement accounts. So that portion is left off by most advisors. Most advisors utilize a long-term strategy that really ignores the necessity maybe for having additional cash on a short-term basis.
Yeah, I think a lot of our listeners probably are listening like, hey, I'm not a professional. I don't know how to trade and invest like them. Well, the great thing about that is you don't have to be a professional. You don't need a license. You don't have to, have anything like that to be an investor. Anybody can get into the market, right? But you have to learn how to trade like those institutions. So that's why you need to understand those skills, those techniques, those concepts to do that. If you're looking like you need extra income or you need extra cash, you need the potential to learn how to do that, to have those extra things. Al was talking about people want vacations, people want to buy cars. Well, don't be that person that just has to get by. Do those different things, do different concepts and strategies to have that potential. So if you want to learn more, you got to learn from the pros, learn from I should say not the pros, but the people that have done it before, that have learned the different skills and teach it to really everyday people. And we have that at Online Trading Academy. A lot of our instructors come from the Chicago Mercantile Exchange, New York Stock Exchange. We have a lot of students that started out as a student, has brought them, their knowledge base and skill base has brought them to teach other people, because it's kind of like one of those things where you learn it, it's reciprocity. You learn it, you want to help other people as well. If you need more income or you're looking for extra cash or the potential to do that, you got to start now. And it starts with an investing class to learn those concepts that we do right here in Bloomington. Call 952-814-4410. In these classes, we talk about our step-by-step rules-based strategy for trading any asset in any market, but also how to time the market by letting price come to you. 952-814-4410, or text the word invest to the number 484848. When you text that number, you're going to receive a text back right away to register for this free class. You're also going to get that cryptocurrency foundations course when you do that. So, Al, we're talking about how the institutions create income in the markets, right? And a lot of our listeners probably want that potential as well. Now, most people think, well, do you need a lot of capital? If you do you have to put it all into the market? How are the institutions taking small amounts of capital, and what are some of the different assets they're utilizing to have income potential?
Yeah, well, the reason I mentioned this earlier, that component is missing, is the income component, is because it requires the use of different assets than your long-term portfolio. Great business model for the Wall Street firms is to put you in something, put a portfolio together. Typically it's stock or mutual funds. That mutual funds probably more so than individual stocks. And then you just hold on to it for years. That doesn't help you with your short-term needs. So there are assets that are specific to short-term returns. There's the futures market, the foreign exchange market, the options market. Not only can they be used for short-term cash needs or short-term goals, but also they can be used with what we call leverage. In leverage is a game changer for you.
It's just maximizing your capital.
It's
to make it simple.
Absolutely what it is. And all of the institutions use it. Warren Buffett uses it. Warren Buffett will tell you as the public just to buy good companies, buy stock in good companies. He'll buy the whole company and then just hold on to it. But he makes $7-8 billion a year using these leveraged assets.
So
we talk about these in the class. We talk about what they are, why they might be beneficial to you, and how you can take every dollar you have and then multiply the impact of that in a much larger investment. That's what's going to help you to kind of handle some of the challenges you have if you're looking at short-term income. Those are also short-term in their duration. And maybe if you're looking at additional weekly income or monthly income, you need something that you can get into and out of at a short-term period to be able to achieve that goal.
Well, I mean, if you were talking about most brokers and advisors put people in a long-term strategy, markets are at all-time highs. It's kind of hard to buy a high stock and hope it continues to go higher and higher and higher. It may, but that's why you're talking about you need these shorter-term strategies. Just look at the Buffett indicator. I mean, this is an indicator that a lot of people like to utilize. I mean, Buffett's talking about it. You know, it's a good thing, but it's saying the market is significantly overvalued and it's likely to return a negative 3% a year from this level of valuation, including dividends. So basically, Buffett's indicator is saying that over the next business cycle, we'll see a negative return. That's what this is saying. And that's why you need those strategies for short-term income potential. Now, you mentioned the futures Forex market. Just explain real quick. I know we talk about these in investing classes, but what is the futures market exactly?
Yeah. Before I go into that, those assets also can be used when you just mentioned a negative 3% return going forward. And that indicator, the Buffett indicator, is what he thinks is the single most important indication of the value of the markets. So, anyways, if you're looking at negative returns, that means negative returns on portfolios that are positioned to only benefit if the market goes up.
I see where you're going with this.
So there are assets that you can use very easily to benefit if the market goes down. You have the potential to have returns that are beneficial to you if the market is correcting, which is a 10% drawdown or more, or you go into a bear market, 20% or more.
So to be clear, if somebody is using the market and in a downward market, they have income potential as the market goes down?
Absolutely. In fact, the market goes down 3 to 4 times faster than it goes up. So it stands to reason that you have an opportunity to benefit faster. Or conversely, if you don't know how to protect yourself, if you don't know how to use the assets that can provide benefits in a down market, you stand the chance of maybe losing 3 to 4 times faster. And that's one of the things you never want to do, is let your portfolio go through a big loss. Protection is the number one thing we teach our students, but in addition to protection, it's how to benefit in multiple market directions, not just up, but down and sideways directions.
I'm glad you brought that up. This past, I guess, 2 weeks, the market's been down.
It
There's
has, that's
people
right.
probably shaking in their boots, is what the kids call it, shaking in their boots. But you know what? It's okay. There's opportunities in down markets. If you feel like you need to catch up, I mean, what you have in your income bucket, we'll call it, fills that wealth bucket, as Al is talking about. If you don't have enough income, you might need to do something differently, right? So have that income potential utilizing the markets. If you want to learn those different techniques and strategies, we have investing classes for everyday people to learn those techniques and strategies on how to use the market for income potential. Call 952-814-4410 for 2 tickets for an investing class right here in Bloomington. We're located next to the Mall of America. These classes are free. They're about 2 hours. We do these on Wednesdays. We do these on Saturdays. So these are for everyday people to learn how to trade like the institutions. Call 952-814-4410 or text the word invest to the number 484848. When you do that, you're going to receive a link back, or sorry, I should say a text back with a link. You got to click the link and pick a date for this class. We're going to give away a cryptocurrency foundations course as well. This is to help people understand what this big phenomenon is, this phenomenal market of the cryptocurrency market. Coming up next, Al, what do you have coming up next?
You know what? Let's do this. Let's talk about what investing and taking a family trip have in common.
Investing and taking a family trip coming up next. Sounds a little different, but I think we're going to find out what that is. Once again, for 2 tickets for this investing class, call 952-814-4410, 952-814-4410. This is Josh and Al, Investing with Confidence. We'll be right back.